Hello everyone, I am Adarsh, lecturer in Vidhyaashram PU College, the Temple of Excellence. In our previous session, we discussed about accounting for ratios. We discussed concept as well as problems. In today's session, we'll discuss about accounting for share capital. In your part B, your second book, the first topic or first chapter will be accounting for share capital. One of the most important as per your examination concern as well as to learn, it is one of the interesting topic for your learning purpose also. In today's session, we will discuss following things. First will be company. So before we go to accounting for share capital, share belongs to whom? Company. We should learn what is company. Then what is share capital of a company? How many types you have in shares as well as how do you issue your shares? Issue of shares as well as the last part will be accounting treatment. After learning all concepts, how do you implement in your examination? How do you present in your examination? That must be in the way of problems. So problems, the format as well as journal entry to prepare issue of shares. Everything will be discussed in today's session. Now, company. So what is company? Right now we are following Companies Act 2013. Earlier we had 1956. Now we are following 2013 Companies Act. Now, so you will get one more question on this. What is company? Now, company incorporated. What do you mean by incorporated? Started. They have started their business. Incorporated are registered under the Companies Act 2013 are called as company. Earlier it was not 2013, it was 1956. So they have given earlier Companies Act. Earlier means what? Companies Act as per 1956. Before this 2013 amendments, whatever company registered earlier, those are also called as company if they are registered as per Companies Act 1956. So this is all about what is company. Now, share capital of a company. What is share capital? Capital means what? Investment. What is share? So those things will be discussed in today's session. How many types you have? One is equity, another one is preference shares. What is equity and what is preference shares? We will discuss. Issue of shares. So once if you learn what is share capital, how many types are in share capital, how do you issue to the public, that will be learned in this issue of shares. It may be in the form of par, premium as well as discount. I'll tell you about discount while discussing in particular slide. Last part will be accounting treatment. The theory as well as concept part will be covered in today's session, but journal entries will be done in next session. So these are the partners. Now, what is the meaning of share and capital? Now, your topic is all about accounting for share capital. Now, I want 1 lakh for establishment. So, I have two plans or two establishment. I have one more establishment plan. For that plan, how much I needed? 1 lakh. I have taken smaller number so that easy to understand. Now, 1 lakh. Right now, I don't have money. So, what I can do? Out of 1 lakh, I may have 10,000 rupees. How much needed? 90,000 I need. So what I can do? I can call public to invest. So each share value is 1,000. Anybody interested, they can come and invest in our company. So each share value how much? 1000. If 90 members came, public, 90 members, each they bought how much? 1000 each. So these are called as share. Share means from this person 1000, this person 1000, this person 1000. Everybody contributed 1000 each. For example, he want 2 shares. He can pay 2000. So he will be shareholder for 2 shares. How many number of shares they want, they can purchase, but each share value how much? 1000. How much I needed? I need 90,000. So single person can pay 90,000. So he will be called as shareholder. Clear? Yeah. If everybody contributed 1000, total I got 90,000. What is my investment? 10,000. 90 plus 10, I got 1 lakh. So I am not only the owner now, these persons are also called as shareholders, are as owners of the company. Clear? Yeah. These are also called as owners of the company. Why? Because they have contributed. So whatever they have contributed, that is called as share. That contribution will be called as what? Investment. Investment, other name in accounting is capital. Share capital. Hope you understood what we are discussing today. So this is called as share capital. Now, marks allotted. So whatever concept you learn, finally you want to know how much marks you will get in your examination. So for your examination, this topic will come for 15 marks. So 1 mark, 1 question, 2 mark, 1 and 12 mark 1. Total how much? You will get 15 marks from this topic. The 12 mark will be problem. 1 and 2 mark will be theory. What will be the theory? Just now we discussed what is company, what is share capital. So later we will discuss more definitions about this 2 marks theory. So we learned what is company. So after learning company, we have to learn the features as well as types of company. So types of company, it is a big topic. If you go for company law, there you will get in detail. But for the examination concern, you will get 1 mark or 2 mark question. So in detail not required. As per your examination, briefly we'll cover up these topics. Now, before we go to kinds, we'll go to features of company. So you know what is company? Any company registered or incorporated as per Companies Act is called as company. Again, I'll repeat, any company incorporated or registered as per Companies Act 2013 are called as company. Now, what are the features? So, for 1 mark question, you have to mention features of company are 1, 2, 3, 4. 4 points you have to mention. Which are those? Body corporate, separate legal entity, perpetual succession and common seal. What is body corporate? Body corporate means any company, we call it as artificial person. Why artificial person? Means non-living being. So why? For example, Infosys. Can we go and talk to Infosys? No, because Infosys is a name of the company. So we call it as artificial person because it is a non-living thing. Now, separate legal entity. What is separate legal entity? Separate legal entity means owner is separate and your company is separate. Whatever happens in the company only responsible, owner will not be responsible for anything. So why? Because as per separate legal entity, owner is separate, company is separate. So in detail not required, only points you have to remember. Perpetual succession, easy concept. So, if there are 50 members in company, out of 53 members expired or left the company. Will the company close? Answer is no. Why? Because it is a perpetual succession, means out of 53 expired means balance 47 and new will be added. So again they will run the show. In case of absence of 1 or 2%, the company will not going to end. The company will continue with the help of other members. That is called as perpetual succession. It will not close. Common seal. What do you mean by common seal? You have seen many documents. In the document, the company seal will be there. The name, registered number will be there. That is called as common seal. That is the identity of any company. So these are the features of company for 1 or 2 marks. For 1 mark, any 2 points. For 2 marks, you have to write 4 points. Now, after features, we'll go for the types of companies. Now, very interesting thing, types of company. The types can be classified on 2 bases. One is on liability of members and second one number of members. First we'll go for number of members, then I'll come for liability of members. Now, so the types of company under this, you have public as well as private. Again, this is also one of the important topic, but for your examination, they will ask you how many types in company. So you have to mention only 2. In detail, not required. But I'll give you brief information about these things. Public as well as private. Now, number of members, if it is a public and if it is a private. Now, how many members needed for public? Public means what? Government. Now, if you are running a public company, the minimum members required is 7. What is the maximum numbers you can have? The maximum is unlimited. You can have even 1000 also. There is no maximum limit for public company. What is the minimum? 7. Maximum is how much? Unlimited. Now, in case of private, how much is minimum? Minimum you need 2 members, and what is the maximum numbers? Yeah. Earlier it was 50 as per Companies Act 1956, but now we have 200 is the maximum number. Minimum is how much? 2. Maximum how much? 200. There is a major difference between your public and private company. Clear? Yeah. Along with these 2, we have one more. See, public means minimum how much you needed? 7. Private minimum how much? 2. Can one person frame company? The answer is yes. One person company as per 2013 Act. Earlier it was not there, but now we can start company with single person. Individual can also start company. That company called as OPC, one person company. So there are some rules and regulations to frame one person company. We have to follow that. Clear? On the basis of number of members, earlier it was only 2 types, private and public. Now one more thing we have, that is one person company. Okay. This is types of company on the basis of number of members. Now, again, types of company on the basis of liability of members. So what is called as liability? Now, you have company limited by shares and company limited by guarantee. What is company limited by shares as well as guarantee? Guarantee I'll come later. We'll discuss limited by shares as well as unlimited company. I'll give you small example so that you can understand. Now, limited by shares means, for example, you have invested 5 lakh. This includes your investment, your premium, your profit, everything. How much is your share capital? 5 lakh. Now, how much is payable to outsiders? So you have taken loan, you have purchased goods on credit basis, you have to pay them 7 lakh. In case of limited by shares, now how much you have to pay? 7 lakh. What is your share capital? 5 lakh. You are responsible only for 5 lakh. Balance 2 lakh you are not responsible. Why? Because limited by shares. How much is your shares? 5 lakh. You are limited up to 5 lakh. Beyond 5 lakh you are not responsible. This is called as company limited by shares. How much share you have, that much you are responsible. Clear? Yeah. Now, unlimited company. We'll go back to same example. What is your shares investment? Share capital? 5 lakh. How much is payable to the outsiders? 7 lakh. Even though your capital is 5 lakh, you are responsible for 7 lakh. Means unlimited company. How much is payable? That much you are responsible. You may ask, sir, I have only 5 lakh. How can I pay 2 lakh more? You have to pay out of your personal property. That is called as unlimited company. Hope you are clear. Now, the last part is company limited by guarantee. What do you mean by company limited by guarantee? Now, you understood what is shares. Now, other than shares, we have guarantee also. Under shares, the members are called as shareholders. Now, limited by guarantee, there are no shareholders. Now, normally, charitable trust, societies, clubs, they go for company limited by guarantee. So, whatever payable to the outsiders will be guarantee given by the members of the company. So, whatever profit they earn, they will not share. That will be utilized for specific purpose. It may be for good cause, for charity purpose, or some orphanage, some other purpose they may use their profit. That is called company limited by guarantee. The members in the guarantee, they are not called as shareholders, they are called as guarantee holders. Clear? Yes. So in detail not required. Remember, for your examination concern, you have to write features, points, types, points, again types also, points. Now, you can take this also, or else you can take this also, but you have to mention on the basis of liability, on the basis of numbers. Explanation not required in your examination, just points are required. Hope you understood. Next part is share capital of company. So, you understood what is share and what is capital. What is share capital? And also you understood what is company. Now, how many types are there in share capital? There are major types are equity as well as preference shares. Now, again, this is your 1 mark question. What is equity shares and what is preference share? The answer is very simple. What is equity shares which are not preference shares? What is preference shares which are not equity shares? This definition is not given by me. As per Companies Act 2013, the definition for equity and preference is equity which are not preference, preference which are not equity. And one more, the major difference between equity as well as preference. Remember, this is equity and this one is preference shares. Now, shareholders means what? Remember, equity and preference. Shareholders means what? They are the owners of the company. Whatever profit earned by company will be given to whom? Shareholders. How many shareholders are there? There are two types. One is equity and preference. Whatever profit they earn, first will be given to preference, then it will be given to equity. Clear? First it will be given to whom? Preference shareholders. Then it will be given to equity shareholders. These shareholders are more preferential, means more preferential than equity. Clear? There is only difference between preference and equity. Major difference. Now, preference shares is one which carries preferential rights over equity shareholders. As I told you, before giving to equity shareholders, first preference will be given to whom? Your preference shareholders. In respect of dividend, what do you mean by dividend? Whatever profit they share, no, that profit we call it as dividend. Now, to be paid and in respect of repayment of capital. At the time of repayment also, first preference will be given to whom? Preference shareholders, opposite to equity. Shares which do not enjoy any preferential rights. They don't have any preferential rights. Why? Because they have to wait until it is paid to preference shareholders. Now, the payment of dividend or payment of capital termed as equity shareholders. So, before giving to him, they cannot expect. So, they are not have that preferential rights. Clear? These are the difference between equity as well as preference shares. Now, if they ask for 1 or 2 marks, what are the features? Features are, in case of preference, can be redeemed. What do you mean by redeemed? Redeemed means taken back. Means company has taken 5 lakh from preference shareholders that can be repaid after 5 years. For example, I am running a business. I have taken 5 lakh from the public. Those public are called as preference shareholders. After 5 years, whatever 5 lakh I have taken, I'll give it back. This 5 lakh, I'll give it back. That is called as can be redeemed, means can be repaid. Redeem means, remember, it is repaid. Clear? Yeah. Second point, less risk. Why there is less risk? Why? Because first will be paid to them, later it will be paid to equity shareholder. So risk will be less. Limited voting rights. Normally preference shareholders cannot vote, but in some cases they have rights to vote. That's why limited voting rights. Last part is less speculative. The fluctuation of price is less in this, so it is less speculative. Now, these are the features of your preference shares. The reverse will be equity shares. Now, can be redeemable, cannot be redeemable. You cannot repay. More risk, risk less, here it is more. Wider voting rights, you have more option or more power to vote. Highly speculative, the price changes highly, so highly speculative. If you learn any one, it's sufficient. Why? Because same thing you can write it in opposite way or negative way. Clear? So these are called as share capital types and their features. So these are the major things. After learning what is share capital, types of share capital, now the question is, how do we issue shares? Now, there are 3 ways. One is at par, at discount, at premium. So, what do you mean by par? What do you mean by discount? And what do you mean by at premium? Remember, par means actual value. Par means what? Actual value. Discount less than actual value. Less than actual value. Premium means what? Premium means more than actual value. So remember, what is par actual value? Discount less than actual value and premium more than actual value. Now, remember in this issue of discount, so now we are following what? We are following Companies Act 2013. As per Companies Act 2013, issue of shares at discount is not permitted. We cannot issue shares at discount, but in your syllabus it is still there, you have to follow that. If you get any problems on discount means you have to work out, but as per Companies Act 2013, issue of shares at discount is abolished, which are removed. Now we have only two types, par as well as premium. Now we will understand what is par, what is discount and what is premium. I'll give you simple example for this. For example, if you go for any movie, what is the price of that movie ticket? It may be 100 rupees. How much it is? 100. So on ticket also it is mentioned the price of the ticket is 100. That is called as par. If the shares are issued at actual value, we call it as par. Now, what is premium? Premium is very simple. Same movie, your favorite hero, first day, first show you want to go. Will you get ticket for 100? Obviously, no. Instead of 100 rupees, you will pay 50 more. How much you are paying more? 50. How much you are paying now? 150. Means this we call it as premium. Means we are paying more. For example, if you want share of any company which is more popular, so it is not available, competition is more, then what we have to do? We have to pay more. The actual value is 100, we pay double the amount to get that particular share. That is called as issue of share at premium. The last part is discount. Just remember, I am the hero of that movie. I am the villain. I am the producer. I am the director. Except heroine, everything is me only. Will you come and watch my movie? The answer is no. Definitely will not watch my movie. Then what I will do? The same ticket, it is 100. I am selling this ticket for 40. Means 60 will be discount. So discounted price how much? From 100 I am reducing to 40. That is called as issue of shares at discount. If it is a newly established company, if they want to sell their shares, they can go for discount. But at present, it is not permitted. Clear? Par means actual value, discount less than actual value, premium more than actual value. If the company's share has more demand, they will pay more than actual price. If the company share is stable, we will pay actual value. If the company is new, no one want to purchase that particular share, then we'll go for lesser price. Hope you understood. Remember this example so that you will not forget. Once if you pay money, what you will get? You will get shares. Shares will be in the form of what? Certificate. It will be like certificate. Earlier it was hard copy. Now we are getting soft copy. To your mail or your registered website you have, in that you will get soft copy of your share certificate. In that certificate, your name, the company name, and how much you are invested, everything will be mentioned. So this is called as kinds of issue of shares. Stages of issue of shares. Now, so what are the stages you have? So you will understand better while doing problem. So these are the stages we have. With the help of journal entries, I'll explain you while doing problem. But I'll give you a brief idea about what are the stages. Okay. Now, your share value is 100 rupees. What is your share value? 100. I am a public. So there is a company called XYZ. What is the name of the company? XYZ. They have share capital. Each share value is how much? 100. If I want 2 shares, I have to pay how much? 200. If I want 3 shares, 100 into 3, I have to pay 300. Clear now? Now we'll go with the example of 1 share. If I want to purchase 1 share, how much I have to pay? 100. What is the total value? 100. I will not pay 100 lump sum or single payment. I can go like this. Application, allotment, first call as well as final call. What is the procedure now? At the time of application, the company will give us application. At the time of collection of application, I may pay 15 rupees. The application price will be 15. What is the total price? Remember, it is 100 rupees per share. At the time of application, how much I will pay? 15. After 1 month, they will allot, means they will sanction. Then how much I will pay? 40. Already I paid 15. The difference 25 I'll pay. Then it will be 40 I have paid. Out of 100, how much I paid? 40. Then after 1 month, first installment. Again I will pay 40. It will become how much now total? 80. Again after 1 month, they will ask for final payment. I'll pay how much? The balance 20. Now I'll become owner of that particular share. Clear? So like this, we have to go application, allotment, first call, final call. So these kind of calculation will be done first time purchase of shares. From the next time, we can go for direct payment. These are the stages we have to follow at the time of purchase of share. Now, so you will be having journal entries on each stage. You will be having 2 journal entries. How many journal entries you have? Total you have to learn 8 journal entries in case of issue of shares. And explanation will be done in your next session while doing journal entries. So these are the things which come for 1 or 2 marks. Just you have to learn the concept or meaning of these points. Now, calls in arrears and calls in advance, you will understand better while doing problem. But I'll give you a brief idea. What is calls in arrears? So, I'll go back to your previous one. So, calls in arrears means application may be in the month of January. This is Feb, March, April. Every month you have to pay 15, 25, 40 and 20 you have to pay. Now, you paid in the month of January for application. How much? 15. At the time of allotment, the difference is how much? 25 you paid. March, difference is how much? 40. How much you have to pay? 40. You have not paid in the month of March. Maybe some financial crisis, you did not pay that 40. This 40 you said that April I'll give you 40. Whatever the previous balance is there, I'll pay it in the next month. Till next month, this 40 will be called as calls in arrears. whichever not paid on time is called as calls in arrears. Clear? So whichever not paid on time, we call it as calls in arrears. So calls in arrears you understood. Now calls in advance. Again we'll go for the same example. Same example, January you paid 15, February you paid 15. How much you paid total? Total you paid 40. Balance how much you have? 60 you have to pay. On March you have to pay 40. Again April you have to pay 20. Instead of April, March itself you paid this 20. Whatever 20 payable in the next month, you paid in advance. That is called calls in advance. Next month payment, if you pay in this month only, we call it as calls in advance. So these are the major things, calls in arrears and calls in advance. I'll go out of the screen. Please write down this definition. Why? Because these things will come for 1 or 2 marks. Now, you have forfeiture of shares and capital reserve. This forfeiture of shares I'll explain you later. Why? Because after doing 1 or 2 problems, you will come to know what is forfeiture of shares. So, this topic will keep it as a discussion for next session. Now, capital reserve. What is capital reserve? So, whatever profit you earn, for example, this year my profit is 10,000. How much is your profit? 10,000. Now, out of 10,000 profit, you will not use or utilize complete 10,000. You may use 8,000 and balance 2,000. Keep it as reserve for emergency. If you want to purchase some assets, if you want to invest in some capital things, if you want to purchase some shares or some emergency purpose, you will keep it 2,000 as emergency reserve. That is called as capital reserve. Why we call it as capital means this reserve should be used only for capital purpose. Capital means what? Assets, purchase of shares or adjustment of the difference of shares amount. So we call it as capital reserve. So as I told you, arrears, advance and capital reserve we discussed, but your forfeiture of shares will be discussed later. But I will give you the meaning of forfeiture. Forfeiture means taken back. Forfeiture means what? Taken back. Anything which is given, if the shareholders not paid properly, that amount and that capital certificate will be taken back is called as forfeiture. We'll go in detail in the next session. Yeah. So in today's session, we discussed about accounting for share capital. So what will be there for the next session? In your next session, the topic will be revision. So we will revise whatever we discussed in session 1. Journal entries. I'll give you concept of, we already discussed about this, means what are the stages we have? Application, allotment, first call, final call. Now these things will be presented with the help of journal entries. Then basic problems. So in the first 2 sessions we'll go with basic problems, then we'll go for your question paper or examination problems. The last part is forfeiture concept. As I told you in the previous slide, the forfeiture concept we have not covered because this is a major thing. After doing 1 or 2 problems, automatically you will understand what is forfeiture. So we will also discuss about forfeiture concept. So these are the plans we are going to discuss or complete in your next session. So in the today's topic, we discussed about what is accounting for share capital. So how much marks allotted for this particular concept or topic. And also we discussed the types of share capital definitions. So which are the things going to come for 1 mark and 2 marks, and also stages of calculation. Everything we discussed in today's session. In the next session, we are going to cover some important topics. Thank you.